Tom Love here, the founder of the Breakaway League. And on our weekly wisdom call today, here's the question I want to go over rather quickly. Why do you think the government encourages you to destroy your tax return after its 7th year? Unless they suspect fraud, which they can go back to the day you were born, there really is no reason that you'd want to keep a tax return. And I've only in my 50-year career had a few clients that actually have kept every tax return they've ever filed. So I have a belief why the government does not want you to keep your tax returns, and it's pretty simple. If I made a contribution, as some of the radio hosts in my city say, maximize your 401k when you start your first job, you're in an 11% tax bracket, for example, and you defer $14,000, $18,000, and you deduct at 11%, and you filled out your tax return, you have it in your basement. Wouldn't it be great if we could come back once you succeed, go back to the IRS and say, okay, look, here's my tax return. I put in $14,000 in this year, and you only gave me back $1,500. Here's what I'd like to do, Internal Revenue. I want to withdraw that $14,000 and pay you back the roughly $1,500 you gave me. That's not the way the tax code works. We have a progressive tax system. The more you make, the higher the bracket. The more you succeed in life, the higher the bracket. You have to quantify the difference between the tax break that you got making the contribution to the tax owed on the distribution. And remember, if I contribute at 15% tax bracket, for example, and I owe 30% on the day that I retire, the government is going to take an additional 15% of your original contribution. Does that seem fair? If you want to learn more about how wealth works, be sure to subscribe to our YouTube channel and like our Facebook page, Tom Love, How Wealth Really Works.